Everyone, and welcome to this billed as a fireside chat with banking leaders in a series brought to you by the Chartered Banker Institute. Wherever you are in the world, we say you are most welcome. We recognize that for some of you, it may be morning, noon, as it is for our guest in Florida, or evening, as it is here for me in the United Kingdom. For those of you watching on catch up later, you will find it to be a fascinating chat. And I can say that because I know what's coming. I'm Bill McCall. I'm the current president of the Chartered Banker Institute. And with me today is Alex Sanchez, the president and CEO of the Florida Bankers Association. A long-time friend of the Institute, Alex has been a regular guest on the Chartered Banker MBA course in Bangor, in the UK and Wales, and also he has spoken with us and for us at the Edinburgh University Business School events. So a long association with Alex and his work at the Florida Bankers Association. He is a strong advocate of responsible banking. He takes matters to policymakers in Tallahassee, the state capital of Florida, where he resides right now, and also to Washington, DC. He is a long-standing member of an influential committee and a regular media commentator too. And you will be able to see him on most business channels. Every now and again, he will pop up on programs. And in fact, we'll have a link later to one of the interviews Alex will be giving on Primetime Business News towards the end of this week. So he's with us for the next hour, and we will seek his views and counsel on a wide range of banking matters to take the pulse beat analysis of the United States banking system, and particularly his angle from Florida and the United States' place in the world. As we go along, you will be able to ask questions on the chat facility, and I will try to get those through the course of the conversation. Now, of course, that only applies if you're watching in real time. If you're watching us in catch up and you're asking questions and there are no answers, our apologies in advance. Now, as a challenge for me, Alex has declared a love of British music, particularly what was called, to those of a certain age, the British invasion of the United States in the 60s and the 70s. Now, with particular reference to the Beatles, Liverpool famous four, and also the Rolling Stones. So, Alex, I'm going to get three songs that you've told me are your all-time favorites into the course of our conversation in the next hour, simply to make sure that our audience is staying with us, staying on message, and staying awake. So the long and winding road of our discussion will cover a number of things. Alex, welcome to this fireside chat. Although it's spring, and spring in Florida means baseball training, as all the teams head south for the warmer weather. And I'm pretty sure the AC is blowing where you are right now. And here in drafty old Stirlingshire, Scotland, there is no fire blazing. But we will have our fireside chat, no less. The US landscape, Alex, has changed materially since you were last in the UK. Last time you spoke at Bangor and you spoke at Edinburgh University, you discussed the trade deficit of the US. And since then, there has been a presidential election with, watching from abroad, all of the bits and pieces around it and the disputes and the disagreements and everything else. And your new president was installed earlier this year. We talked about trade deficits before, and also debt, those two Ds that I suspect will be coming up in the conversation over the course of the next while. The debt, the national debt of the US, and the trade deficit no one seems to want to talk about those, Alex, perhaps except you. Now, you kindly invited me on to a call you'd arranged with Senator Rubio some time ago, and he dared to raise the word debt and deficit as a senator sitting in Washington. What's your view as someone inside the US of those two Ds? How do you see it?
You know, Bill, first of all, let me, before I answer that question, I want to thank you and Simon, you know, and for inviting me here today, and looking forward to our conversation. I wish I was there with you, obviously, like other years. And I want to say a big hello to all the chartered bankers around the world who may have met in Bangor, in Wales, or in Edinburgh. And so good, you know, good to see everyone. And of course, you know, to you and Simon and to all the other Brits on this call, you know, a big hello from the United States to our greatest ally, the United Kingdom. You know, we love you over here, and we appreciate everything. And our friendship is very, very special to us. So Patsy sends hello, Bill, to you and Simon. Unfortunately, she could not be on here. But let's dig right into this. Bill, look, our country, misery loves company, Bill. Our country now is deficit spending like many other countries, especially the democracies around the world. And we've got to get a control of this. In the United States, our national debt has gone up from $5 trillion just 21 years ago. 21 years ago, it is now at $30 trillion. We just passed a $2 trillion COVID relief bill that basically is with borrowed money. It's not good for our country. It's not good for the economic strength of the United States. So I think that is something that we need to, you know, tackle. Otherwise, it's just not going to be sustainable. As far as, you know, fair trade, as I talked at the University of Edinburgh's School of Business, it seems like a long time ago, 2 short years ago. Look, the trade deficit that the United States has with China, as do many of the European democracies, ours is at $500 billion per year. So we buy $500 billion more in products made in China than they buy from the United States. That's not fair and free trade. That and our previous president, President Trump, was in the you know, the beginning stages of renegotiating those trade deals. And I believe, Bill, there's going to be pressure on our new president, President Joe Biden, to continue that trend, because it's just not acceptable in the United States to have such a large deficit with one country on trade.
So I'm going to share with you and our audience a snapshot that was taken on the Suez Canal the other day. Now, this is the 200,000-ton container ship Evergreen that beached itself because of high winds and whatever, and blocked the Suez Canal for a day or so. Many hundreds of ships were backed up because they couldn't get through. You can see the shot is taken from the deck of another container ship. But what I wanted to show you, Alex, and obviously everyone else looking in, is the sheer volume of trade on that 200,000-ton ship, probably most of it heading towards Europe and the US, and it beautifully captures what you've described.
No, that's unbelievable, Bill. And I got to tell you, you know, look, China, the old adage of you can't beat them, join them. They since you know, since Deng Xiaoping came to power in China and started changing China internally, leading to today's leaders, you know, China said, you know what, we're gonna adopt the portions of the free enterprise system that we like, and encourage you know, wealth building in our own nation, and obviously the manufacturing in our nation. They've talked to British companies, US companies, and companies all around the world. And you know, I serve on the advisory board of the Exim Bank. Export-Import Bank of the United States, Bill. The UK has one, France has one. And just to give you an analogy and a comparison, China spends more in trade finance just from the public government sector, more than Italy, Germany, India, the UK, France, and the US combined. And that's just the Chinese government. And then you take the Chinese banks, which also do a lot of trade finance. And so they put in a tremendous amount of monies into financing, because their strategic program is Made in China 2025. They want to dominate the world and get countries like ours and countries all over the world hooked on Chinese products, which are cheap, inexpensive, and easy to buy. And once that happens, the manufacturing bases of other countries quickly declines. And so they're playing, for the most part, we can talk about their labor standards, and, their factories are churning out products 7 days a week. The allegations of people, miners working in some of those factories, especially as you get out in the outer countrysides away from Beijing. We can talk about those issues, which are true and valid. But for the most part, China's saying, you know what, we're going to beat every country. So they put a lot of resources in the trade finance business. And I can tell you, again, from my time on the Exim Bank board, look, they lend a lot of money, Bill, to smaller, poorer countries in exchange for that country's natural resources. China is pouring $1 trillion plus in Africa to dominate Africa with trade. And what they do is, when those countries cannot repay the loans to China, they take control of assets with the money, like ports, airfields, when those smaller countries cannot cover the debt. For example, in Sri Lanka, they signed a 99-year lease at their port facilities over to China. China now has a 99-year lease, basically owning the port in Sri Lanka. And so, because they couldn't pay China back on its initial loan. And this is happening in Maldives. This is happening in other countries around the world as well. So China, look, it's clear they want world domination, and they're trying to do it by the Western model of the free enterprise system. They've adopted, many of those points. Yeah.
So I suppose what they've done actually is adopted Western finance principles, where they lend, they take security over an asset, and if the lend goes bad, they acquire the asset. Now, I've heard of that model somewhere before. So isn't it the reality that they are merely playing the game in front of them, and they're doing it rather well?
They are, Bill, but then you bring in the nationalism issue. No country wants to say, hey, my airport or my port is owned by the Chinese or any other country for that matter. I think, the national interests of that respective country come into play. So they're heading into some territories that are not, are not firm. But that's the game the Chinese are playing. And we in the Western countries, in Europe, Canada, the US, and many other countries around the world, obviously are addicted to these low-end, low-cost Chinese products. And there's a price to pay for that. I disagreed, Bill, with our national, our Federal Reserve Bank chairman from many years ago, Mr. Greenspan, when he said the United States would have the technological jobs here and the manufacturing jobs would go overseas. I think, yes, all countries want the technological jobs, but we also need manufacturing, Bill, to be done in the UK, to be done in France, to be done in Singapore, to be done in Canada, to be done in Brazil. That is so important, and we certainly want that in the United States as well.
So you mentioned the impact of China as the coming power, as it were. We have a number of members in Australia, Australasia, and also in Taiwan and Singapore. So we say greetings and hello to them if they're watching and catch up, given the hour of the day. I did host another chat with a number of our members around the very situation you've described, and one of our Australian fellows was reminding me of the challenge that Australasia has, or Australia has, with China in terms of relationships. Around 30% of Australian exports go to China, and they've had some real challenges around the pandemic and whatnot. So that relates to trade. You've mentioned the debt, so the two big Ds as far as I'm concerned. Right. With the change of administration, with your new president installed, and I'm always, it's amazing to watch the installation of a new president, because it should, I suppose, become less partisan, and they become a pluribus unum, the president for all in your country. Right. What are your hopes and fears for the new president?
You know, Bill, look, you're right. I mean, once a president takes this, the oath of office, he's our new president for all Americans. America right now, Bill, politically speaking, is a very divided country. Joe Biden won by the narrowest of margins, the same narrowest of margins that Donald J. Trump won in 2016. Obviously, I think our country is looking for a John Kennedy, for a Ronald Reagan to unite us, where, and other leaders that I can give example of, who overwhelmingly won the election in most states. We haven't had that in a while. And so we are a country divided, but I always remind members of Congress that on the northern steps of the United States Capitol, on the evening of 9/11 in the year 2001, they sang "God Bless America" on those steps, locked arm in arm, and forgot about their political party and put America first. So, while bickering, and you know this from the UK, you have it there, as do other countries, it goes with the territory. Both parties, which we have two primary political parties here, the Democrats and Republicans, are always going to be exchanging ideas and debating each other. But at the end of the day, they need to work together. So my hope, Bill, to answer your question is that President Joe Biden will bring America together with differences, because that's part of a democracy. Everyone can't think alike and think the same. So far, I don't think that's happening, but it's only been 3 months, so we need to give him more time. But he needs to work across the aisle to the other political side on common legislation, like reducing the debt, like other issues. Obviously, the COVID-19 pandemic is an issue that we all want to put behind us, as do all other countries. But I hope, that's my hope. And my fear is, Bill, that we will be too partisan, and the country can only afford certain things. And I hope President Joe Biden and his supporters remember that, we just can't spend a lot of money we don't have. We can't continue at this clip.
So at the current point, with the COVID pandemic, and with the sad and horrendous loss of life that you've had in your country, and we've had a proportionate sort of problem in the United Kingdom, and the lost souls around the world, it's just a horrendous situation. You have, through legislation in Capitol Hill, approved a $2 trillion package, which will, of course, be added to the national debt.
Right.
The schemes that are available now for organizations to borrow, to be paid grants for payments to individuals. What's your take on that? And maybe your view as a banking association CEO, what's your take on that? Because it's a lot of money. And I'll come on to my second point, which is around inflation. But if you look at that as a sheer quantum of money, it's quite eye-watering. But we've become maybe blasé about saying 1 trillion, 2 trillion. It's, you know, is it real number? Is it a real number anymore? But your take on that would be really interesting.
Well, Bill, our mission here at the Florida Bankers Association is to advocate for the banking industry, which provides, as you well know, having been a member of the industry and an active member still today, that we provide the capital to all the bankers listening in and watching this interview. The bankers around the world, what is their main focus? Is to provide the capital that makes the economy in your respective country go forward. Because you help people become homeowners, you help them buy a flat, you help them buy a home, you help them start a business because you provide the capital. That's our main focus here at the Florida Bankers. And the second part of our focus is to promote and advocate for a strong economy. We're worried that this national debt one day is going to come back to bite us like a mean, hungry dog out and about in the countryside. I mean, it's got to matter. At some point, the national debt will matter, and we can't keep spending money we don't have. To the politicians, Bill, my message has been, and publicly, and you saw my opinion page op-ed, all politicians now, where are the leaders gone? Everybody wants to be Santa Claus. Everybody wants to say, I'm going to give you this, this, and that. Well, we can't afford it. And we, the people, also have to be realistic. We just can't, President John Fitzgerald Kennedy once said, don't ask what your country can do for you. Ask what you can do for your country. We got to remember that saying. And it's not just about me, what am I getting? But unfortunately, that is a prevailing view by many today, not all, by many, and that needs to end for the good of the country, whether we're talking about the UK, whether we're talking about, the Philippines, or the United States, or Brazil, or Argentina, or France. We've got to end that type of mentality.
So the challenge there, of course, is that when offered free things, the general populace think it's free. But of course, someone is paying for it, and your tax dollars are going to work. That $2 trillion that's been agreed on Capitol Hill, the concern over here, as we look back to you, is as a sovereign state, you can issue as much debt in your own currency as you like. And what you do with it is your problem. It's then who pays the piper is the question.
Right.
The concern we have here that we play back to you is that could create real inflation within the US as that money courses through the US, but more importantly, could cause inflation through price rises in the UK, right. And Europe. Now, Europe has approved a €1 trillion plus package. The UK has deployed about 350 billion so far. It could be 400 billion. But hey, what's 50 billion between friends these days?
Right.
Our chancellor here, which is the equivalent of your sort of finance group, if we saw a 1% rise in interest rates to combat inflation, that equates to 25 billion on his interest bill of the national debt.
Right.
Now, you would have an associated problem in the US too if interest rates rose. Now, in context, 25 billion for the UK is about half of our annual schools budget and about half of our annual defence budget. So these are not numbers to be trifled with. So do you think, and I heard on the conference call that you'd arranged with Senator Rubio, he talked about the real concern about the debt, and he said inflation, and he mentioned the impact on the national debt. Is that a fear or an argument that's beginning to gain traction, or is it only on his side of the house?
To be honest with you, Bill, I think there's enough blame to go around to both political parties in the United States. It just seems like, depending on the day and depending on the weather, this political party is talking about it versus another political party. Both parties need to step up and be accountable and take action and work jointly. Let me tell you who got it right, surprisingly. President Obama back in 2011 named a group called the Simpson-Bowles Commission. Mr. Simpson was a Republican senator. Mr. Bowles was President Clinton's chief of staff. They were the co-chairs of the National Debt Commission that he appointed, equal number of Republicans with an equal number of Democrats. The national debt at that time, Bill, in 2011, stood at $13 trillion, which seems like a drop in the bucket today. Today, it's 30 trillion. 30 trillion, 10 years later. And the commission came up with ideas over a 10-year period to cut our national debt by $4 trillion. But once President Obama realized where those cuts were going to be in spending, he backed away from it. The commission became a total failure. He did not advocate and lobby those members to pass their own recommendations, and it went nowhere. But that's what we need here. And for countries who are listening in and watching today, that may be the solution. You need to get both sides to the table for the good of the country and putting the country first, and to come up with joint ideas to reduce that national debt. Because look, default is not an option. If we default on this, no one is going to buy our securities in the future. And if nobody buys our securities, we're going to have to start living within our means. And those are going to be drastic cuts quickly. And that's where the pain is going to come in, Bill. That's where the pain will come in.
So coalition government in times of crisis isn't a new concept. It has happened through world wars and various other crises in the past. So individuals who work together, irrespective of partisan politics, for the common good, as it were. That seems to be quite a simple idea, yet why is no one doing it? And I merely leave that as a rhetorical question. Alex, when you look at Florida, a state that is growing in population terms significantly, and many of our viewers today may not follow all of this, but there is a demographic shift going on. Yes. The baby boomers of the 50s and 60s are now reaching retirement. They're moving from the upper and northeast coast, the colder climates, and there's almost an emptying of elements of the United States. And it seems to me, as someone who's regularly in Florida, they're going to the sun. Is that right? Well, that confirms my view. I mean, the numbers are staggering. There's several thousand people a week relocating to Florida.
Yes. You know, Bill, a good point, Bill. And, you know, in the United States, you know, we have, as everyone knows, the 50 states of the United States. Everyone has their own governor, which is, you know, in effect, our president, our prime minister. And so our state, like all the other states here in the United States, has their own legislature, their own Senate, their own House of Representatives. So there's a lot of decisions made at the state level. And one of those is the taxation at the state level and at the local level that's made per state and in some cases by cities. And what is happening is what you said, Bill. There's a migration not only of the baby boomers, but we're finding that a lot of people of all ages are moving to places like Florida, places like Tennessee, places like the Carolinas and Georgia, where it's much more affordable housing wise. There is not a state tax, income tax. Florida and Texas and one or two other states do not have an income tax here. So we pay our federal tax to the United States government, but we don't have a tax return that we have to do to the state of Florida. And there's no city in Florida that has an income tax like New York City. New York City, if you live in New York City, you must pay the federal tax, the state of New York federal tax, and the city of New York City federal tax. You have to file a tax return to all three entities. In Florida, you just file one, the federal government. And people are tired, Bill, of the high taxes, high regulation, high costs in those states like New York. And many companies and individuals are moving to states like Florida and saying, I've had enough. I've had enough. So yes, Florida is gaining 1,000 employees. I'm sorry, 1,000 new residents a day, which in many cases, with all the companies moving here into Texas, it's almost like 1,000 employees a day. And so we're excited about it. And what does that do? That forces states like New York to perhaps one day, and they're going to have to do it real soon, revisit their policies because people are leaving. They're voting with their pocketbooks.
And post the pandemic position, and it has been announced of late, a number of Silicon Valley companies in California do not expect everyone to return to the office. Some are actually incentivizing members of staff to stay away because I think California is seeing a bit of a migration out of California. Yet the juxtaposition here is it's a Democrat state. We better not get into the realms of tax returns in New York State because we may end up in very deep water around that one. What would your concern be, though, for the Florida Bankers Association? Can the state cope with the influx of people? I mean, in terms of infrastructure and all of the amenities that are required for this. I mean, 30,000 people a month is significant.
Right. Bill, good question. And you know what? Leadership is important. And I can give examples of many, many countries where great leaders have stepped up. And of course, the one that comes to mind right away is one of my heroes, Winston Churchill. I have his book right here in my office. And of course, he stepped up to lead your great nation during the Great War in the 1940s. And his leadership was just unbelievable. It was exceptional. And one person can make a difference. And we're very fortunate that, our governor in the state of Florida, Governor Ron DeSantis, has led us through this pandemic. And Florida has remained open for business, but also secure in our fight against COVID-19, the COVID-19 pandemic. So it's a balance. Some states like New York and California have pretty much remained closed. But I think that's because of a lack of leadership at the top of their state governments, which has caused a lot of pain and a lot of small business failures. And small businesses, Bill, are the heart and soul of our nation's economy, certainly in Florida, but really throughout the nation. Now, to answer your question, yes, we are worried about the infrastructure and the schools, a number of, but Florida is a big state. There's still enough room for a lot of people to move here. Our construction now seems to be going upwards instead of across. You're seeing more high-rise condos being built to take on the influx of citizens that are coming in to live here, either part-time or full-time. It's a beautiful state. Environmentally, it's beautiful. And it's got a lot of, it's very affordable. And obviously there are pockets that are not, especially our bigger cities. But compared to New York and some of these other places, Florida is very, very affordable. And so I think that trend will continue. Kiddingly aside, I will tell you, I just hope people put jokingly I say this, but I think I'm very serious. When people move to Florida because they're tired of high taxes and tired of high regulation, please come here, but don't vote for the same type of candidate that you voted back home that created the systems you're leaving because you don't like that anymore. So that's a challenge. As California,
we'll avoid. We'll avoid pronouncing on the politics of your great nation from here. Just as it seems to create problems when past presidents have pronounced on politics in the United Kingdom, of course. You talked about the environment, and I'm going to take the environment to a different angle now. Florida is a coastal state. There was slight ramification after the oil disaster in the Gulf of Mexico some years ago. Louisiana got it worse, and Texas got it particularly bad. The whole climate debate, what planning are your bankers putting in place? Now, I say this in the context that 25 years ago, Swiss bankers have an altitude rating for credit lending, where the height above sea level is important to them, especially if they're lending to a ski resort or a leisure resort or something of that nature. And the height is increasing all the time because of climate change. Now that your new president has re-engaged with the Paris debate, and we've got COP coming to Glasgow at the back end of this year, where the world leaders will converge on what is the second city of what was the empire, a significant city in the west coast of Scotland.
Right.
What are your banker members thinking and doing around the whole climate challenge?
You know, Bill, look, it's an issue we care about, obviously, not just as bankers, but as citizens of Florida, as Americans, as global citizens. And obviously, the Paris Accords there, they need to do a tougher job. I mean, China, the Paris Accords treat China as some developing country that they don't have to meet the standards that the UK, France, Canada, Brazil, and the United States and others have to meet today. Why? China is the second largest economy in the world. They have 13 of the top 50 banks globally. They're not a poor country anymore, but they don't have to abide by these accords until what, the year 2035 or so? I mean, why not today? So let's look at the major polluters of our world today. And China needs to abide by those accords if it's going to have any significance at all. That's why some Americans were in opposition to the Paris Accords, because it wasn't being equally enforced across the table with countries like China. So, but our bankers here, in the United States and particularly in Florida, look, we live, as you said, in a coastal. We're very concerned about it, obviously, and Florida. A lot of our real estate is near the water, by the water, or just a few minutes or kilometers or miles from the water. So this is an issue we take very, very seriously, and we'll continue to monitor it. And hopefully, again, what we want is across the board implementation and enforcement of the standards, and not play a blame game from 50 years ago or 70 years ago. Let's talk about 2021 and who's polluting this world today, and what needs to be done to stop that pollution, to stop the global warming.
There would be an alternative view, Alex, which is, well, the United Kingdom, particularly through the late 1700s into the 1800s, the Industrial Revolution, we were spewing all sorts of stuff, as was the developing a newborn United States of America, pre the Civil War and post Civil War, and we've had our go. So we are now being ultra righteous about everybody getting with the program, and the others are saying, well, hang on a minute, you had a go, we aren't having a go. So that seems to be the counter to the point you've made, where we're saying draw a line, everybody plays by the rules today.
Bill, look, good point. And I know that there could be finger pointing back to oneself from these other countries. But here's my reply to that. There are things that we didn't know 100, 200 years ago. And the effect on the environment was one of those. Our scientists, not only in our two respective countries, but around the world, I've learned so much about what impacts the environment, and what the reasonable measures that we need to take to protect that environment are. We didn't know that 100 years ago or 200 years ago. And I'm certainly not suggesting that the poorest of countries be held to the same standard as the United Kingdom or Canada or the United States. Certainly not suggesting that, but I am suggesting that China should be, because China is a major economic power in the world today. And there's no excuse for them to be grandfathered in to the standards of the Paris Accords 10 plus years from now. There's no excuse for that. We have the knowledge, they have it as well, and they also have the wealth to abide by those accords.
So as bankers, we have a responsibility, and our institute has signed up to the UN principles on sustainable lending, in essence, which is about making sure that we have a duty of care when our members are lending, that we are taking note of the particular projects we're lending to. Now, there seems to be we are more green than you going on. And I know that the EU is having a particular problem at the moment where gas-fired power stations are considered to be green, in inverted commas, because they are more green than coal-fired power stations. But we know that both are hydrocarbon and both are negative. So there is a great reset going on right now. And I think that is going to be one of the big global conflicts we will see about energy independence and the move to green economies. But from our members' perspective, they are signing up to the principles of good stewardship, which is an old Scottish word for, I suppose you could dress it up and call it something new today. But stewardship means that you have a deep and meaningful relationship with the person or the business you're lending to. You have a responsibility and a duty of care to make sure that it is appropriate and that they have the wherewithal to make the repayments and all of those good things. It's no different for your members, but you've very often talked about the difference between Wall Street and Main Street. So divorcing the two types of banks, where you have global super banks that are playing in all sorts of marketplaces, and the local banks that you advocate for in your home state. I'm very interested to hear what the current status is for those domestic lending banks that you represent very much as community banks, and where you see the biggest threats coming from.
Now, do you mean in the environmental space, or
no, just in banking? In banking generally.
Bill, great question. And let me say this to all the viewers out there. In the United States, we have this phenomenon called community banks, which in the United States, we have close to 5,000 banks. We've had a lot of mergers in our industry, but we still have a lot of community banks. And we're seeing like 3 or 4 being formed in Florida now, which you raise a minimum amount of capital, and then you get the regulatory approval to open up that bank in that community. Community banks have done well. The association, the Florida Bankers Association, represents all banks, the larger banks, the regional banks, which are like community banks, except they're in many other states, but not across the country. And then, of course, our community banks that just are in the state of Florida and in certain number of communities within the state of Florida. And there's enough to go around for everyone. There's not a competition necessarily of all three. Jamie Dimon, who is the chairman of one of the world's largest banks, as you know, Bill, JP Morgan Chase, wrote an op-ed in the Wall Street Journal a few years ago calling for the need for America to have community banks. Now, why would Mr. Dimon say that at one of the world's largest banks? Because he knows that the incubator system for the startup of small businesses, many times, not all the time, but many times, are funded by our community bankers. And those small businesses grow to 100 employees, 500 employees. Microsoft started in the garage of Mr. Gates' father's house when he dropped out of Harvard. And that's where Microsoft started and then started growing from there. So every big business today had its start somewhere, and it was small when it started. And that's the role that community bankers play. Their ears are closer to the ground, and they fund many of these startups, as do our regional banks. And then, of course, our bigger banks play an important role because they fund our major U.S. companies who employ tens of thousands of Americans, and they're needed in the landscape as well. So everyone has a role to play. But yes, the competition is very competitive in the United States in the banking space. but there's enough to go around for everyone. But community banks are a viable group. They're smaller, they're more nimble, and they play a very active role in each community, Bill.
So the membership that you advocate for in Tallahassee, you're talking to the political leaders there, advocating for your group, and there is no Chartered Banker Institute per se in the US. It's a very different model. So our bankers would proudly state that they're chartered bankers. They adhere to the code of conduct, and they would have continuing professional development and all of those sort of things. Is that something you think is missing or not?
You know, Bill, look, ideally, I love what you all do, not only in the United Kingdom, around the world with the chartered banker. And I remember meeting with you and my good friend Simon and seeing the cards of bankers at Bangor University that had chartered banker on their business card. And I love that formalization process to tell the world I'm a chartered banker. We have it here in the United States, but it's not as formal as you. Our bankers are continuously taking educational training, whether it's through the Florida Bankers Association or for our larger banks, they do it in-house. It's just that designation, it for the most part, is not a formal process here. But our bankers do take a continuing education to keep up on the latest, not only new regulations and new laws, but new techniques on how to best serve their customers. I just wish we had it as formalized as you do in the United Kingdom and in many, many countries around this world.
Well, we're approaching our 150th anniversary, and I know you're wondering, how do I look so good after 150 years, Alex? But you know, it's the whiskey and the Scottish air that does it. At what point do you think Walmart, that has applied for banking licenses in various places over many, many decades, in fact, right. At what point will Walmart become a hyper financial services player to really have a go and to counter the Amazon online world? What one of our viewers this evening is keen to know more, or your view on that.
You know, Bill, in the United States, we have a separation of commerce and banking. And that's been the case since the Great Depression here in the 1930s in the United States. We don't want, a company to own a bank and then, fund itself through the bank. As the old saying goes, you rob Peter to pay Paul. And so we've had a separation of banking and commerce. And that's important because, we want people to know in the United States that every account they open insured by our Federal Deposit Insurance Corporation, which guarantees each bank account in the United States up to $250,000. And that was created by Congress and President Delano Roosevelt in 1933 is when that was enacted into law. And so we want to make sure people, know that they can sleep like a baby tonight when their money is deposited in an FDIC bank account. And so you want to make sure that bank is independent. And sure, you might advocate for firewalls and separation, but there's always the perception that maybe that business has their hands in the bank's safe, and that might cause an uneasiness in the banking industry. So for the public, especially, of course. So I think we're going to see a separation. They might be able to issue credit cards and do things like that. In the case of Walmart, Bill, what they've done across their landscape and their footprint, they have contracted with banks to open up branches in their facilities to cater. But most of those branches just take transactions on ATMs. There's not a lot of lending. There's not a lot of home mortgages and those type of financial products being sold there. But that's how Walmart has done it. They have contracted with local banks to open up branches in their locations.
And of course, the state point around the authorization of banks. So if you manage to get a banking license in the state of Florida, it doesn't mean that you can open a branch in Nevada. You know, there are rules and regulations around the state lines, because we do often forget here that you are a United States, and each state has, in fact, many of the states have their own Federal Reserve. I think there's 7 of them around the US. You know, so the Fed that we talk about in New York is obviously the dominant player because of the number of banks that are domiciled there. But there's a Federal Reserve in some other states. So it's quite a diverse marketplace. Now, for many watching, Alex, it will probably have been the fastest hour of the week. And we do have a number of questions that I would like to get to. So we may have to do part 2 of this at some point.
Okay.
And to those of you who are sending in questions, I've got, you know, specifics around past President Trump's Tax Cuts and Jobs Act of 2017, which is a bit detailed for Thursday nights at this point in time, e-commerce and a whole pile of other things. So I'll ask you publicly now, would you commit to coming back to talk to us again soon?
Oh, of course. I mean, you and Simon, all you have to do is ask me. And I would prefer to be there with you in Edinburgh, I got to tell you. But oh my God, Bill, you know that. Yeah, appreciate our friendship. I really do.
I know you would. But the key, the key thing here, of course, is that because of the wonders of technology, you are speaking to more of our 30,000 members globally than any other guest has.
Wow.
Simply because of the wonders of the internet. In Edinburgh, we can pack them into the university or wherever. But when we do this sort of global online webcast, you're talking to all of our membership. And in the last 5 to 10 years or so, our international members, our chartered bankers, our fellows, and those who are sitting exams and everything else have become way more important to us. Now, we are getting close to the end of that hour. You are a regular visitor to the shores of the United Kingdom. You are a former serviceman in the US military, so thank you for that. I know you aspire to join a British board in due course. You would love to do that. I know you enjoy your time in London. You have a particular tailor on Jermyn Street you really enjoy, and you know there is all of that. Yes. I could say to pick up one of your favorite songs, "Get Back," but in due course, we will get there. Now we have meandered down that long and winding road.
Can I just tell you this, Bill? Ever since Simon showed me at the University of Bangor in Wales, when the Beatles went there for their retreat, along with Mick Jagger, and their photos are in the Student Union. And I know our friends around the world who have been at Bangor have seen those photos. That was totally amazing. And remember Professor Ted, Dean Ted, I think he rode the train with John Lennon from London to Wales for that retreat. I mean, that was just totally unbelievable. Oh my God, I love that story.
You know, the story, Alex, though, has a punchline, which is if the number of people who rode the train or say they rode the train with John Lennon from London to Bangor were on the train would have been so long that they wouldn't have needed a train. You know, it's one of those stories. Now, I was about to say we have meandered down the long and winding road. Yes. I should hear a bell ring every time and I hope that our audience has got some satisfaction. And although we are drawing to a close, there is no time to get back. Now, as you might know, Alex, I'm having similar fireside chats with other banking professionals over the course of the next month or so, demonstrating to our wider demographic of membership the pathway that you and other experienced senior professionals have taken in their careers in banking or associated with banking, as you are. Through our 2025 foundation, when we will celebrate our 150th anniversary, and its partners, we aim to give opportunities to enter our profession to those who ordinarily wouldn't be able to. So those who perhaps couldn't study, those perhaps who would never find a way and that's through diversity of people and opportunity, because we see that as a crucially important part to the future of our banking profession. And I don't use the word profession lightly. We do see it as a profession.
Yes.
Now, I know that you hold the idea of a fair opportunity for everyone to be very close to your heart. Your family arrived in the United States from Cuba,
right,
escaping the regime there, and your parents looking for a new start for a very young family at that point in time. You thrived in New York and then moved with the family to Florida. Now, I understand, and I've done some homework, you were a notable basketball player. You were a king of the hoops. Now, you're a tall chap, and I can see how that would make sense. And as I mentioned earlier, you went on to serve your country in the military. But deep down, Alex, I think, having done my homework, you are really a frustrated baseball pitcher. The coaches at your high school really got to you for basketball because of your height, and you were a good player. And you reckon that one coach said to the other coach, "Don't dare take him to baseball."
Right.
Now that sent you to the hoops rather than the mound.
Right.
So what you don't know, Alex, is that I'm a baseball fan too.
Wow. Wow.
And I've visited many stadia around the US. I've been to the old Wrigley Field.
Oh, of course. Oh my God.
Chicago.
Yes. Oh my God, Bill.
With the Beatles theme, I've been to Shea Stadium before the Mets moved.
Yeah. Right.
I've been to the white fences of the old New York Yankees before they moved.
Wow.
And of course, I've sat behind the Green Monster in Boston.
Oh my God. Wow.
And then, of course, the hometown team that I support when I'm in Florida, the Tampa Bay Rays.
Exactly.
Clearly.
Exactly.
And of course, I have a soft spot for a team that no longer exists in New York called the Dodgers.
Yes.
And of course, they are now the LA Dodgers. And my particularly favorite, because a friend of mine from the US was a pitcher for them in the 80s, the Cincinnati Reds.
Wow.
So all of these, and I brought along just to show you my glove.
Oh my God, Bill! Gee, wow!
Now this glove is special because it's signed by Derek Jeter, who you will know was a very famous Yankee.
Sure, Hall of Famer. Hall of Famer. Wow.
Hall of Famer. Now, I know that I've also watched baseball in Cape Cod. I've been to the Up and Comers League there, and I go to spring training in Florida and watch when I'm there. Now, I know that your hero in those high school days of a few years ago was Bob Gibson, the all-star, multiple Golden Glove winner, a Hall of Famer, and a pitcher for the St. Louis Cardinals. Now, Gibby was number 45 on his vest, on his shirt, and that jersey was retired by the Cardinals. Now, that is a significant thing for a player.
Yes.
He also retired having played for only one ball club in his entire career. Now, that doesn't happen very often. Now, the retiring of that jersey was a true mark of respect. Now, very sadly, Mr. Gibson lost his battle with cancer last autumn. And it would have been great if we had managed to make some kind of connection. Now, I've been in the old St. Louis Stadium, now replaced, of course, with the shiny new one. I watched the Sunday afternoon game there. I have a real soft spot for the Cardinals. And I thought, as a memento of our conversation today, we could mark it with something that will link you with the strong bond you have fostered between your Florida Bankers Association and our Chartered Banker Institute over here in the UK and globally. One of your boyhood heroes, Mr. Gibson, your office gave you a package earlier today, Alex, and I'd like you to show us the contents of what you've received. So with our grateful thanks, we hope you fly that on your office wall to signify your love of the St. Louis Cardinals Gibby Gibson, sadly passed, but a true hero for you in your childhood and high school years. Alex, it's always a pleasure to speak to you, sir.
Thank you.
From all of us at the Chartered Banker Institute, we really do thank you for taking the time to be with us.
Bill,
My
thank
thanks,
you.
my thanks to you and to the Chartered Banker Institute team, particularly Heather Marsh, who put together all of the technology around this. As we're approaching 7 o'clock in the UK, 2 p.m. with you in Florida. With that, Alex, we'll come back at some point. I close this event and we look forward to seeing all of you soon. So stay well and goodbye to everyone.
Thank you, Bill. Thank you so much. Thank you, Simon. Thank you for the gift. Great to be with you.